Good morning, this is Jim Hierchek with Autochartist. Today we're going to talk about how to trade Forex with the Autochartist platform. This webinar will be done exclusively with the live data, so we'll be switching back and forth between the Autochartist web version and the Autochartist MT4 version. So I'll just go back and forth at times when I feel it's appropriate. Hopefully you have at least one of these, otherwise it's going to be difficult. But if you're new out there, you'll be able to catch on fairly quickly. I'll do reviews at some time, so for those experienced, it may seem redundant from some of the other webinars I do, but I do feel that rather than move around quickly and point things out, it's important to show you guys how to use it and use it properly. Before we start, we're going to take a look at our disclaimer and make sure that everything is legal and everyone's aware of the risks involved in trading. That went a little bit too fast. The Autochartist service includes chart pattern identification in respect of foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The Autochartist service and its contents should not be construed as a solicitation to invest and/or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any results discussed within the service and its related media content will be achieved. All opinions, news, research analysis, prices, and other information is provided as general market commentary and not as investment advice. Autochartist MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use or reliance of the Autochartist service and its content. Okay, that being said, what we'll do is we'll move on to look at some live data here and catch us up to speed. Okay, the Autochartist platform is an interesting platform because it allows us to take a look at the market in terms of chart patterns. It's not a trading system like some people like to follow, but what it does is it creates these interesting formations, or finds these interesting formations rather quickly, so that you're not spending a lot of time going through chart patterns and things like that. So I find it as an experienced trader, I find it a very good way to get right to the meat of the trade, to get right to the theme of the day, to find out, are we trending today? Are we not trending? What's the leader? Things like that. And then I apply trading skills that I've developed to work within the Autochartist platform and exploit these patterns. Okay, for those of you who are not familiar with the program, show you that Autochartist screen on this. This is the web version. It's broken up into three main categories. There's chart patterns, there's Fibonacci patterns, and there's key levels. Now, since I'm doing this live, hopefully I'll have examples in all three. On this left side, I create portfolios that I want to look at. So, for example, I can look at the Euro dollar Japanese yen intraday by itself. I can look at FX majors all intraday. I can look at FX majors daily. So I can select what I want to by creating searches. Okay, inside these searches, I can also look at what kind of patterns I'm looking at. What I want to look for, and I can also look at different types of quality indicators that I want to look at, as well as direction. Okay, that's basically what Autochartist is about, and that's more what an introductory webinar would show. So in this case, I'm just going to look at Forex markets today. Now, after I select the criteria that I want, Autochartist will search for a particular pattern or market, and it will put it into a list of emerging patterns on this right side. Okay, and an emerging pattern is one that is about to take place, or the conditions are there for something to take place, but have not yet broken out. The main feature are these breakouts here, this completed pattern. But back here, when you get to emerging patterns, you can see that with an emerging pattern, like for this US Canadian dollar, this is a 1440-minute chart, that once Autochartist saw this criteria, this top and this bottom, finish this triangle formation, that it said, okay, looks like the market's turning, and based on the fact that it's an emerging pattern, that it could rally back up to this resistance line. Okay, this type of signal is a precursor to what can happen. So it's an early warning. So for those who like to trade a particular market and don't want to watch it all day, you can set the criteria for your individual market in the Forex market and wait for Autochartist to identify an emerging pattern. Once you see it, this is really attractive to a swing trader, because as the market finishes with this support, you start to get the signal. You can go in early and anticipate whether it's going to hit this resistance line up here, this yellow line. See if we can blow this up here this morning. There we go. So you have to see if we're going to anticipate the move into this yellow line like we're doing right now, or if it has enough momentum to break out and become a completed pattern. But the beauty of it is that you get this information well ahead of the crowd, so that you're not, buying too late. You want to be able to work with a program that can give you a signal early enough, like right down here, so that once you do get confirmed, that it'll start popping up on other trading programs. So that'll help you when you want to trade, because you need that crowd to help push the market higher. You're not going to move the market by yourself. I certainly can't, and I certainly can't stop a market when it's going down or going up. But I want to have that push where that public money comes in, or those people that have those late trading systems come in, or those lagging indicators that come in and drive the market in the direction I want it to go. So that's real important. That's how I use the emerging patterns. Okay, we'll close this out here. Right, there we go. Now, when I move to the completed patterns, I'm looking at a pattern that is already formed and is now breaking out of this either resistance or support point. In this case, a resistance point. And in this case, this is an ascending triangle. If you're not sure what an ascending triangle is, you can always click on this I button here, and you can see that's what it's supposed to look like. And Autochartist then identifies the characteristics, when it forms, and what it suggests. So you always have help. So when you see this market pop up and you're not sure what it's supposed to look like, you can see this is almost a textbook ascending triangle. All right, so now Autochartist throws it on the complete side because it broke out. This green bar shows it's a breakout, and then once that occurs, you get the projected direction as well as the minimum target and the maximum target. And that's also listed down here. Now, once it breaks out, you also have the quality of the pattern identified. So you can see this breakout rating. Okay, this is pretty high. This only goes from 1 to 10. This breakout rating indicates the momentum with which the price broke through the resistance. So in this case, this is pretty strong. This is almost a solid candlestick through. And when you get that type of move, you're expecting continuation and a rapid movement into the zone. So this is a good example of a strong breakout. Okay, now as a trader, You may want to pay attention to things like the quality. This is the overall quality. It averages initial trend, uniformity, and clarity. The top quality indicator, initial trend, and the bottom deal with what's happening outside the pattern. So initial trend is what was the pattern doing ahead of the breakout of the chart pattern formation. Uniformity and clarity look at how the pattern was formed. Were there gaps? Were there spikes? Did the market, are these tops and bottoms equidistant? You know, is there something that makes it appealing to a trader? Because what you want to do ultimately with patterns is you want to attract the attention of the institutions and the big traders, because if they can see it clearly, they're going to be the traders that push it through these various levels. And so when you're dealing with this breakout, you can see that if you have an initial trend that's strong and it's up, and you get a breakout that's up, all right, and it's strong, then that's a pretty good combination of these two, breakout and initial trend. Also, if the initial trend was up and the breakout's up, so it's going to, Autochartist will tell you it's a continuation pattern. Excuse me. You can tell from my voice today, well, it's winter time here in Chicago, and sore throat season, so apologize for that. All right, the thing that I look at when I watch for Forex markets is I like to trade breakouts myself. I like to take offers when I'm buying breakouts. I'm not a passive trader. In other words, I don't let it break out and then wait for it to come back and then move. What I try to do is look for trades. I like to trade, first of all, set up a plan and a strategy. And what I tend to do is I look for a market that may be in the news, may have a special report coming out, may have central bank activity, something that's going to make that market move, because it's important to me that I trade at the time when other traders are going to be there, where there's going to be some action. I don't want to be caught in a market that's not moving, especially dealing with chart pattern programs. You know, you only have a few ways to trade. It's pattern, it's price, and it's time. Okay, this deals with the pattern aspect of it. Autochartist deals with the pattern aspect. So when I have a pattern, I want to make sure that there's volume and there's volatility behind it. That means that ahead of time, if you're a novice trader and you're not familiar with it, there are good time periods to trade and there's bad time periods to trade. As a market analyst, I'm a believer that there's no such thing as a bad pattern, that there's just bad volatility. I think that everybody's got, you know, if you put in the time and in the effort to find, to chart or to use a program or to learn how to trade, that oftentimes it boils down to is how much volatility or how much buying or selling power is behind on the trade. So in this case, you see there's a strong breakout here, but what I'd like to focus on is this ascending triangle. Okay, there's a couple of formations that I watch, and they're basically in what I call the non-trending category. Non-trending patterns are patterns like triangles and pennants. Okay, trending patterns are channels and wedges. Okay, so in this case, we're looking at a ascending triangle, and it's a non-trending pattern. And the reason why it's a non-trending pattern is because inside here, I'm looking at a wide range that gradually compresses till this triangle forms an apex here. Okay, and the reason why this is interesting to me is because it means that traders are waiting for something. They're anticipating something, and what happens again with traders is they get frustrated because of the price action is too familiar. They want to see new territory. They want to see breakouts or breakdowns. So in this case, as this market compresses, you'll start to see a group of things happening. You'll start to see, of course, the range is getting narrower. You'll start to see this alternation of this green candlestick, red candlestick, green, red, okay, and that tells you that there's uncertainty, okay. Even on this rally it looked like there was a little bit of uncertainty, but it still went up. But mainly when you start to get this compression of the ranges and this alternation of the candlestick colors, that tells you that the market's, something's ready to happen. Now, when working with a non-trending chart pattern in the Forex markets, you want to, because of the volatility that is in the Forex markets, you want to look for a pattern that's going to show volatility or indicate impending volatility, like this triangle formation. So as we approach this apex here, trading gets more narrow, and eventually it starts to pinpoint when and where this market can make its move. Doesn't give you direction, but it tells you something's going to happen. And so you can start gearing up at that particular time. What gives you the possible direction is the Autochartist looking at this initial trend. If it saw that this initial trend, you can't see the rest of this data, but maybe on MT4 we'll be able to see it. When you start to see that this was strong going up, then all this was here was, this whole thing was sideways action, and now the market's getting ready to continue what it started back here. So that's how initial trend and breakout work together. Okay, markets are allowed to go sideways. It's almost like they're a living being with the, the collective nature of trading. We have all these eyes from around the world and all this money and all these emotions going on in the market. It almost takes on human characteristics. So at times you're going to see a market at rest, and these triangle formations describe that scenario. And then finally, when you do get that wake up period, you should exploit it for potential profits. Okay, the other thing is, when you narrow down this range here, not only are you getting the volatility, but there's going to be times that it will go up and go back down. You'll get a change in direction, no question about that. But if you lay that out over time, if you say, well, I've got 252 days in a year, how many times does that happen? Or if it's for currency markets open almost 365 days a year, you have to weigh the odds of getting caught in a whipsaw on a breakout system with the odds of missing a spectacular move. So I think the odds are in my favor to trade these breakouts, because you're not with rules and with risk parameters, so that I'm not going to get I don't feel like I'm going to get whipped, and if I do, it's not trade manipulation, but it's just part of trading. Okay, now when you're approaching these levels here of resistance and support, and you start to see the market make a move, through this resistance level, you have to be aware of what the market's doing. So on a breakout, I consider this a momentum system. So I've got my chart pattern called non-trending, but I've got my strategy as a breakout. And with the breakout, that means that I want to keep my risk-reward parameters pretty tight to get a pretty good ratio. So when I break out, what I want to see is continuation of the next bar. You can see it here. It's kind of ghosted here by this candlestick. I want to see this continuation. And oftentimes you'll see the wick or the body of this next candlestick about 50% of the previous big candlestick breakout. And you can see how you get this alternation of this 50% and then it moves higher. That's a good standard pattern. What you want to avoid with a breakout is you want the momentum to continue up. So one clue that it may not work is that on the breakout you get a little red signal. Okay, that could be a sign that the market's slowing down. If you start to see red engulfing the previous breakout, then what that tells you is that buyers haven't really been convinced the market's going to go. If you spend enough time around Chicago or in around the pits and around the chat rooms, trading chat rooms, you'll hear that successful traders trade with clarity and conviction. Okay, so one way to do that is to show it on a chart, and you want to see that green appear. That shows you that the buyers are coming in. If you start to see red, then it means that somebody has been bold enough to sell in front of that rally, and that should be the first tip that maybe the momentum's not there. Now, how does that work in the real world, what it means is that